What if I told you that one of the greatest traders in history doesn't just look at charts and numbers, but he actually feels the market? Today, we're going to get inside the mind of a true legend. We're diving deep into the philosophy of Tudor Jones.
And really, this one sentence says it all, doesn't it? It's the difference between being a spectator in the stands and being the quarterback on the field who is totally in sync with the game's rhythm. That's a huge, huge distinction. And honestly, it's the key to understanding everything we're about to unpack.
All right, picture this. October 19th, 1987. It's called Black Monday for a reason. The Dow Jones just completely cratered, plunging over 22% in a single day. I mean, this was one of the most violent crashes in financial history. A day of just pure, raw panic and absolute catastrophe for so many investors. But in the middle of all that chaos, one man wasn't losing. Oh no, he was winning. Big time.
And that man, of course, was Tudor Jones. And look, this was not a lucky guess. He saw this storm brewing from weeks, maybe even months away. This was based on a really deep historical feel for how markets behave. And this one trade, well, it would make him a living legend.
I mean, just look at this. Simply surviving a day like Black Monday would have been a massive win. But Jones didn't just survive. As the entire market was in a free fall, his fund, Tudor Investment Corp, reportedly finished the day with a staggering 62% gain. Think about that. That's the kind of return a great hedge fund might dream of in an entire decade, and he pulled it off in a single month. Just incredible.
So the big question is, how does somebody develop that kind of foresight? Well, to really understand the master, we've got to go back to the very beginning, to the place where his most important rules were basically hammered into him, and not in some quiet classroom, but right in the chaos of the trading floor.
Jones may have gone to Harvard, sure, but his real education, that happened right here, in the madness of the cotton trading pits. Forget peaceful libraries. This was a loud, visceral, in-your-face world of screaming traders and frantic hand signals. And it was here he met his mentor, the legendary trader Eli Tullis, who taught him what was probably the single most important lesson of his entire career.
So Tullis's big lesson was about what he saw as the cardinal sin of trading. It's this tempting but absolutely fatal habit of throwing more money at a losing position, just hoping and praying it'll turn around. You think you're lowering your average cost, but what you're really doing is digging yourself a deeper and deeper hole. It's a decision driven by ego, not logic, and it's exactly how traders blow up their accounts.
This simple, almost brutal phrase, it became his mantra. He built his whole risk management philosophy around it. In fact, he famously started every single day with one powerful assumption, that every single one of his positions was wrong. Just think about that for a second. It's the ultimate defense against ego. No assumptions, no biases, just a cold, hard focus on one thing: survival.
Okay, so with that foundation of just brutal risk management locked in place, let's start looking at the specific strategies he built on top of it. This is the playbook that let him go on offense and conquer the markets with such incredible precision.
Now this is the brilliant insight that led him straight to that legendary 1987 trade. Jones and his analyst Peter Borish did something that was, remarkably simple but just so powerful. They took the chart of the Dow leading up to the great crash of 1929, and they literally laid it right on top of the chart for the Dow in the mid-1980s. And the patterns weren't just similar, they were an almost identical fractal. It was human behavior, greed and fear, playing out in the exact same way, just 60 years apart.
And this just perfectly illustrates his core belief, right? The details change, the companies change, the technology for sure changes, but that underlying rhythm of human psychology, that cycle from euphoria all the way to panic, that stays constant. Seeing that rhyme between 1929 and 1987 gave him the conviction, the guts, to place massive short positions, betting against the entire market right before it came crashing down.
Jones used this understanding of history to build a framework for what he called stocking bubbles, and he used it perfectly again with the Japanese Nikkei market in the late 80s. He saw these three psychological phases. First, you get euphoria. Hey, I'm a genius. Look how much money I'm making. Then comes the really dangerous part, complacency. This is a new paradigm. It can't possibly go down. And finally, you get the sudden panic, where everyone sprints for the exit at the exact same time and discovers there's nobody left to buy.
Now you might be thinking his whole strategy was just this grand, intuitive vision, but behind all that instinct was a simple, almost mechanical core. One of his key tools was the 10-month moving average rule. A moving average is just the average closing price over a set period, in this case 10 months. It smooths out all the day-to-day noise.
And the rule is dead simple. If the price is above that average line, you can own it. If it falls below, you sell, and you wait in cash. That's it.
And the numbers here, well, they're just astounding. From 1900 to 2020, a simple buy and hold strategy turns $100 into about $2 million. Not too shabby, right? But this simple 10-month rule, it turns that same $100 into $5 million. But honestly, the most important part isn't just the higher return. Look at the max drawdown. That's your biggest potential loss. It's just 11%. This system helps you sidestep the catastrophic crashes. It keeps you out of trouble, and maybe just as importantly, it takes all the emotion out of your decisions. Like Jones says, simplicity is more valuable than complexity because simplicity is executable.
So, this brings us to what might just be the most important piece of the entire Paul Tudor Jones philosophy. We've talked about the rules, we've talked about the charts, but the real battlefield, it isn't on a computer screen, it's inside your own head.
You know, Jones is famous for being an aggressive trader, but this slide really shows you it's the aggression of a predator, not a gambler. It's a three-step process. First, you wait. You wait with extreme patience for the perfect setup. Second, you strike with conviction. And third, and this is the part a lot of people miss, you retreat. You get out. He saw his job as finding the best risk every day, but also being able to get rid of that risk in a heartbeat. It's all about controlled, disciplined aggression.
Wow, I mean, this is such a powerful insight. So many traders try to force their will on the market to predict every little tick. Jones understood that's just a fool's errand. The only thing you have any real control over is yourself, your emotions, your discipline, your ego. And if you can achieve that self-mastery, you become resilient. The market's chaos just can't break you anymore.
Think about it. What do you do when you feel fear? Most of us, we run from it, or we try to bury it. Jones did the exact opposite. He listened to it. He knew that fear, especially the collective fear in the market, is powerful information. It's a signal telling you where the balance of power is shifting. And for your own trading, that little pang of fear is often a sign that you have way too much risk on the table. By using fear as data, instead of an emotion to be ignored, he gained another incredible edge. So, after decades of navigating all these booms and busts, what are the timeless principles we can really distill from his career? You know, how can we apply his wisdom to how we approach the markets and our own investing today? It really all boils down to these 5 pillars. First, defense wins championships. Managing your risk is job number 1, period. Second, listen to history. Its patterns give you a roadmap for what's coming. Third, don't overcomplicate things. A simple system you can actually stick to is way better than a complex one you can't. Fourth, the biggest battles are always internal. You have to conquer your ego before you even try to conquer the market. And finally, making money is one thing. Keeping it, well, that requires wisdom.
And here it is. This is the ultimate statement of humility from a titan of the industry. It's a constant reminder to just respect the market's final verdict. The price is the price, the trend is the trend. Your opinion, no matter how smart you are or how much research you did, is totally worthless if the market disagrees. The goal isn't to be right, the goal is to be profitable. And that means aligning yourself with reality, not with your own biases.
And I think that's where we'll leave it. Paul Tudor Jones built this legendary career not just by watching the market, but by feeling its rhythm, the ebb and flow of human psychology playing out on a massive global scale. So the question for all of us is, can we quiet our own minds enough to hear that same rhythm? Can we learn to feel it too?
Thank you for watching our video. In the next episode, we will examine the journey of another legendary trader. Don't forget to subscribe and turn on notifications. For more content and strategies, you can join our Telegram channel. The link is in the description. Stay well.